Welcome aboard the StrateG channel, in which we discuss the market from a Supermacro context all the way down to the daily noise. Feel free to subscribe and hit the notification button. Also, this is not financial advice, so take it educationally. So let's dive into the Supermacro chart of Bitcoin. In this chart you see the price data all the way back to 2009, 2012 the first halving, then 2016 the second halving, the third halving 2020, and 2024 the fourth halving will be the next one. So if we see this chart, on the vertical axis you find a logarithmic price scale going from 1, 10, $100, so each time 10k, 10x, and the black line is the price line, and what's a very nice line is the blue dashed one, which is the 210,000 Bitcoin blocks average. So each halving takes 210,000 blocks to be mined, then the halving occurs. And so this is a very important line, this blue moving average. And it takes basically one halving, that's the time frame for this moving average. So when looking at this horizontal axis, the time goes logarithmic as well. So the distance between those vertical lines decreases over time, this way. Okay, if we then look at an important trend, we can draw this line, which goes through these three peaks. And at the bottom we have the 210,000 blocks moving average. So price is basically bouncing between those two lines, the blue and the green line. Okay, so when we look at, for instance, the Elliot wave structure, I found the following count. If we start in 2009, we have the first wave up, then the first major correction, then the second wave up, and the second correction, and now we have the third wave up, roughly. So these 5 waves. I'll close the wave. From Elliot wave theory, it's important to count also the subwaves to assess whether it's valid or not. Okay, so when we start at this first one, it should be subdivided into 5 waves as well. We can take, for instance, discount 3, 4, 5. I'll go through. Let's make it blue and make it primary. No, not primary. For instance, intermediate, also not nice. Okay, yes. So we have these 5 waves up here. Then we should also be able to find them here. 1, 2, 3, 4, 5. And then now the final one from the red 4. We have, this was back in 2018. This was 2018 bear market, and then we have the first run up before the COVID dip. Then we had the COVID dip here, testing the blue line. Then the second impulse of this subwave, back to the blue line, test 4, and then what I expect is a 5th wave up. So it's maybe nice to show this way, because the 4 wave never dropped below the 1 wave. That's a rule for Elliot wave theory, and it held here at 15.4k, and the top here lies at 13.8k. Okay, you might think, okay, that's a huge jump here, but this is also a subwave of another lower degree. So basically this one, 1, 2, 3, 4, 5. So let me choose the right style. Now it's minor. Let's make it sub-minute, and let's make it a different color, like green. Okay, I removed the wave itself, but I keep the count. So It's important to know that this is the Supermacro structure. Bitcoin started all the way back here and it made one giant red wave up. The first wave is considered to be the accumulation phase for smart money. The second impulse up, the momentum phase, and the third wave up, the blow up wave. And it's a fractal, so it should also be subdivided into smaller waves. Okay, so let's hide this once again, because I have another nice observation here. If we measure the angle between price increases from the blue line to the top of the increase, we can measure. Oh, wait a second, it should be at the top like this. It should be at the bottom, right there. Okay, so like this, 70 degrees. Then we have here another. Wait a sec, I should first hide this wave and this wave. Well, it's in trading view, so I should be able to hide it here. Okay, nice. So I'm gonna measure the steep increases of Bitcoin. So basically here, 17.7 degrees. Let me lock this here. Then we have here another blow off, 79 degrees. We have here a steep ascent, 76. Here from the first move up, 74. Then the COVID dip all the way to the top, 73. And well, it's important to notice that most of those steep increases, those parabolic moves, a lot of them are fifth waves. So the blow off waves on every level usually are the steepest. So if we want to predict the top for this fifth wave here, we can see, okay, 73, it's about 70 degrees at a very steep ascent for Bitcoin in this chart. Okay, here we have another one. Oh, wait, that's the wrong one. I should take this one. Okay, 73. It's basically the parabolic inclination. So if we start here at the bottom and we go for 70 degrees, well, 78 is too steep, but never drops below 69, the previous cases. So if this were to be a steep ascent like that, it's likely before the halving, because the halving is here, the 2024 halving. And what you can see here is when I draw this line up, the ascent is basically 70 degrees only before the halving. Okay, so that's basically what I'm expecting here. You might also say, okay, but what if it just bounces from the blue line here? Then it's also possible to extend it after the halving. But the key takeaway here is that we have a fifth wave up, and there's quite a chance it will be before the next halving. So thank you, that's the Supermacro view. Now we've discussed the Supermacro context, it's time to zoom in on the latest wave up. So since 2019 we have had the first wave up, we saw also in the Supermacro chart. Then we had a first sharp correction in 3 waves, A, B, C. Then we have a third parabolic move up. The impulse, the momentum phase of this wave. Then we had since 2021 A, B, C correction sideways, it's a flat correction. It didn't feel like that, but on a logarithmic scale it still is. This was a sharp correction going from 3k to roughly 14k back to 4k, so that's almost a 90% dip with respect to where it started. Almost this whole move retraced back to 2, and when we had the second impulse here, we have had a irregular flat correction with the B top higher than the top here. That's a type of a flat correction, you can Google it. What's important to show here is that if we take the top here at the 3 to the bottom here at 2, okay, wait a second. Let me quickly add those levels. And it's nice to see if we extend these lines to the right, that price, oh wait, it should be there. Price dropped exactly to the 0.5 retracement level of this second impulse upward. Okay, so we see here a strong bounce all the way around at 15k. Well, then what I'm expecting is a fifth wave up. And if we compare those two corrections, if we take 3 major points at the beginning of the downtrend, the tops here and one of the bottom, the lowest bottom here, then we can construct a channel. A channel requires 3 points. So I've had those green dots are basically determining the channel. Did also do it here with the top here and those 2 major bottoms here. And what we can observe is that when price eventually goes back to this zone, it has a big struggle. So each candle is a week, so this is quite a time, a struggling time. And also when it breaks through, you can see it on the reaction that it was a key zone to break. Well, we've had a struggle this year here since June all the way up to October 2023. And what's nice to see is that we have broken through it and are still following this parabolic move that I'm anticipating, which can be before the fourth halving. Not necessarily, there should be a fifth wave from this perspective, but this parabolic move is the thing I'm anticipating here. Well, if we then zoom in a little further, so I'll quickly remove this group, go to, no, that's not the right one. Also a nice chart, but not the one I want to show. Yes, this one. If we zoom in on this smaller, even smaller time frame, then if we go from the 4th to the 5th, it should also be 5 waves up. And it's nice to see that if we zoom in on this, let's see if this is nice. Okay. Then we had since the bottom last year at 15.4k, we have had 5 waves up as well. Then a sideways irregular flat again, with the B wave slightly higher than the V top here. And the discussion was whether price would fall lower here to say the 22k region, or that it would break through into the next momentum impulse. So we have smart money, first wave, second wave, then the third wave, 4th, 5, 5th wave. So this is in terms of structure, so don't pin me on this time. Here it could go way faster and it could also be slower. I'm expecting it fast because it's a blow-off wave, but markets can often have presence. Okay, I thought there was another nice chart. Yes, the step-like parabolic curve. So this is from a book, and basically 3 bases are needed on top of each other, and then at X, this black X, we have a very steep increase in a very short period of time. Now we can identify those 3 bases here and X here, and we can see it's following quite nicely the trajectory as sketched here. So that's looking good as well. I thought there was another chart. Okay, well that's important to see. And then if we look at targets, of course always important, I'll always take the top of a correction to the bottom for extension targets of the next bull phase. Look, I can do it here as well, this correction. You can see nicely how the 2.272 was closely met. Also how important the 1.618 was here in this zone. It's nice to see, but that's how I project my targets. So if we look here, if we go to the Supermacro chart, the upper trend line aligns with 200k before the halving. So what I'm looking for is strong targets around that price line. So maybe the 2 extension here, it's at 300k, that's too high. Then we can maybe have the 1.786. I can draw it this way as well, which lies at 226k. Okay, could also choose, okay, let's take the start of the correction, and then price lies, this one is at around 200k exactly. Oh, that's really exactly. So let me show the prices. These are between brackets here, so you can maybe use it if you like. These are strong targets, and what's also important is that the third wave, so the second impulse up, is most often the largest wave. So the blow-off wave often is shorter. It can be the shortest, this one, but since the first wave was shorter than the second impulse, the third wave can be longer than the second impulse, but I don't expect it. Then let's have a look at the trend-based Fibonacci levels. So I clear this one for now. And then it's basically the maximum target lies at, should have this one. Maximum target lies here at 1. At 1. Okay, so this green line would be the maximum target based on this trend-based Fibonacci extension, because then at 1, this wave up is exactly the same length as this one, and we expect it to be shorter. And from this perspective, if we delete, one sec, then it would be very reasonable to write down those 2 targets, 157 and 200k. And also, if you take this one, 170 and 222k, 3k. Okay, so these are the targets based on the Fibonacci extensions of the last correction we went through. So each week I share my view on the market via a Substack newsletter, which is sent by in the app if you subscribe, and via the email. I discuss the news of the week. some micro setups for Bitcoin. Also this chart I showed just yet with the full Elliot wave written out and some frequently asked questions. Also always I include invalidation lines at which the analysis will be invalidated. This one we discussed as well. Well, then just let me shortly address this chart. It's the alt cap for basically all altcoins, excluding Ethereum because it has its own cycle. And what's nice to see is that the trend line, well, at the end of 2021 it peaked, and then we have a downtrend. This blue trend line was broken here, and price is now breaking here from the lows, has printed a higher high here, and has also formed a head and shoulders bottom. So the target of this is like somewhere here, and if we have the target with Fibonacci extensions take the top through the bottom, then the target zone will be here around $2 trillion. Well, Total DeFi also has a similar structure here and has broken above the neckline. This is the neckline, and it's nice to see it's breaking through strongly. Okay, then also a quick update on stocks. If we look at the SP500, the top 500 companies of the United States, we can see this cup and handle pattern in black. And we have also this head and shoulder bottom in play, which is not final yet. In the meantime, price is broken above this black line and is around 4,500, and the targets lie around 6,000 here. Okay, then we have the NASDAQ, the top 100. Also a very nice cup and handle, and it has broken above the handle with a large green candle last week. So, and it's continuing its course this week. Also a very high target for the NASDAQ. Then let me move to the dollar. Well, here, let me see. Oh, that's nice actually. June 2022, we have had an uptrend. This green one, which was a strong one, and the dollar index broke below, had a bearish retest here, took 14.5 month low, and well, then we had a very large rally of about 14 weeks up, running into the 0.5 Fibonacci resistance from this top to this bottom, and we see the dollar got rejected there after breaking this smaller blue trend line, and currently it's around here, 104. So it's playing out quite nicely, this one. Also on the Supermacro I will show in a... Then we have the Supermacro context, in which I described this whole move of Bitcoin. We also discussed this one. More information you can read there. Well, another nice point of this chart is of course that after each halving so far, Bitcoin reached the upper channel, so here as well, and now it hasn't, so it's another argument for price could skyrocket before the fourth halving. Okay, so we discussed those angles as well. Then a nice comparison with Google. So if we draw these two lines for BTC, we can do it for Google as well in its early days. And we see after the fifth wave here that we had a first recession in 2008. Bitcoin never has had a recession, and there are strong indications there will be one. So after this blow off top, I wouldn't be surprised if we had a breakdown like this for Bitcoin. In the meantime, Google is already through the roof, so this would be a great buying opportunity for Bitcoin if it plays out like that. Well, here another chart of 2019. The first wave up, first correction, second wave up, second correction, and also the subcount of these waves. So this ABC correction can be subdivided in 3 waves down, 3 waves up, then 5 waves down. So that's from an Elliot wave perspective very good. And then we have the target is at the upper trend line here. And so this was July 2023, so 2024 is like here. Yeah, should be around 200k, also fitting the targets. Then S&P 500, we have a very large chart ranging all the way back to 1872. And if we look from a distance, the very important 1929 crash is something that pops up, and also those recession in 2000 and 2008. We can apply also the Elliot wave theory here, and then like say this is the first wave up, the first sharp correction, then the momentum phase, then a flat ABC sideways correction, and then we have a blow off phase 4 or 5 here. And the target for me is this yellow line, and surprise, it's around 6,000, the target of the cup and handle I just showed on the smaller time frame. Okay, so this is looking very good. Well, when it hits this one, this yellow, the last 2 times it was 45% decline, and here we had an 85% decline. So there are 2 possible counts here, so like 1, 2, 3, 4, 5, or this blue one, 1, 2, 3, 4, 5. So we might be in the middle of the orange one or at the end of the blue one. And either way, I expect a strong reaction at this yellow line, around 6,000. Okay, so then the final one, the dollar index on a large scale. And what you can see here is basically a pitchfork. The red line goes through the bottoms here, and those blue circles show also highs, and here as well those lines show the structure where the dollar index finds its resistance and support over time. So this is 1971. Well, you see a strong reaction here, and then it's often decreasing in a never-ending downtrend. So what I expect is basically last year it bounced here down from the 115 down, and currently it's still at 104, so basically here, and I expect it to go to this lower trend line here over time. So that's it for today. Thank you for your attention, and feel free to subscribe here. I also have a trading group, Telegram group, in which I share every month one trading setup based on Elliot wave theory. So, well, that's something you get added to when you become a paid subscriber of this Substack.